Thank you, Jim. I will say this is very, very interesting. It's an historic event. The very first international day trading expo. When I started in this industry 13 years ago, there were no teachers, there were no mentors.
For those of you who are not quite aware, I am the author of the best-selling Tools and Tactics for the Master Day Trader. I'm also co-founder of Pristine.com, which today is considered to be the premier educational resource for active self-directed traders. Pristine.com, of course, was formed about 7 years ago in my basement apartment with one client. Today, 7 years later, Pristine has a worldwide following of 88,000 that spans over 62 different countries.
Señor Oliver Velez, bienvenido a Colombia de Noticias Caracol y gracias por estar con nosotros. Cuéntenos por favor en qué consiste el método Trade for Living que usted creó y que ha sido tan exitoso a nivel mundial.
4.5 years ago,
Hace 4 años y medio, vi que uno de los mayores problemas que los corredores de bolsa tenían era la falta de entrenamiento y un monto apropiado de capital. Lo que hice fue crear un programa que se llama Trade for Life, que le permite a los corredores tener continuo entrenamiento cada día con fondos que yo proveo, por lo cual se elimina el miedo a perder mucho capital.
If you want to buy off the 200, which I strongly suggest, once you get a green bar at or near the 200, there's your buy and there's your explosion.
We're talking about trading tips today with Oliver Velez.
We've experienced obviously one of the most volatile months in years. I don't believe we've experienced this level of volatility since, 2008, 2009.
The greatest event of markets and trading in Spain. Oliver Velez, a legend of the trading. He is also known as the rock star, the messiah of the trading. Do you feel comfortable with this nickname?
I actually do. That, believe it or not, that name, the Messiah of trading, came from a quote by the Dow Jones. The Dow Jones calls me the Messiah of trading all the way back in the year 2000.
Mr. Velez has worked 31 years in the market, Wall Street, as you said. He is the teacher, he's a speaker. He also has written 5 best-selling books. It's a lot of work for you.
When I first started trading, I had certain challenges: lack of training, lack of education, lack of the proper technology, and more importantly, lack of the proper amount of capital. My program provides all of those 4 needs for every single trader. It's a professional guided program that leads the trader from the very beginning novice stage to being a self-sufficient professional.
Live from Orlando, Florida, I'm Adrian Mans for the Money Show Video Network. I'm here today with an old friend of mine, Oliver Velez. I've known you since, 1997. Wow. Back when you were doing some heavy-duty trader education for new guys getting into the business. The latest is I Fund Traders.
I've been training and educating traders since 1994. In 2007, when I was one of the first people in the industry to actually risk my own capital on my students. I've spent the last several years throughout Latin America building a Latin American trading team, and at this particular point we're about 9,000 traders strong. Wow, worldwide. So it's been a long road. It's been busy, but very, very successful.
I want to let you know that the last time I was at this event was nearly 10 years ago.
Traders, welcome, welcome. Welcome, traders. Welcome, supporters. Welcome, followers. Welcome, subscribers. Welcome, students. Welcome, professionals. Welcome, amateurs. Welcome to all of you guys, wherever you are in the world, whether it's morning, afternoon, evening, wherever you are, welcome. Welcome to another live masterclass with Oliver Velez. Of course, my name is Oliver Velez, guys, and we are going to have, as my last live masterclass of the year, this is going to be a big one. This is going to be a big one, guys. So come on in, guys. Make yourselves comfortable. Grab the beverage of your choice. Got a little water here. Maybe even grab something to take notes with. You're going to want to take notes with this one. Because what we're going to do, right, is we're going to talk about how to handle ourselves in the event of a crisis, in the event of a major collapse. I'm going to show you how virtually every single crisis in my life turned out. Every single financial crisis in my life turned out to be one of the best wealth building, money making periods of my life. And I want to show you how we can read the signs of the potential next crisis that's likely to hit the markets, I think, as early as sometime late next year. And I want to show you how to read those signs and how to turn these periods of crises, which typically have the vast majority of people scared and losing. I'm going to show you how to turn it into profits for yourselves. I think everyone should have a crisis strategy. I call it my panic profit strategy, and I'm going to teach it to you today. All right. So, guys, before we get started, tell me quickly where you're piping in from. Where are you coming in from, guys? Talk to me. Where are you coming in from? What country? What city? What part of the world are you coming in from? Talk to me. Talk to me. Boom. South Africa is in the house. I love it. Toronto, Canada. Boom. I see you. All right. Good. Vegas is in the house. I'm reading your comments here, guys. Panama, Houston, Malaysia. Oh my God, it's going by so fast I can't see it now. All right. Brazil. Oh, shoot. Germany, India, Singapore, Italy. Wow. Of course, all over the United States. Barbados, Utah, of course, Florida, South Africa, Maryland. Wow. Crazy. Turkey. Insane, guys. Of course, we have a very international audience. We tend to have people piping in from all over the world. I love it, guys. I love it. I absolutely love it. So look, let's get started. What I want to do is I actually want to make sure that I'm not going to be if I can, I want to make sure that I'm not going to be interfering. I think I might be interfering. So we're going to take this off. Give me just a second here. I take myself off. Boom. All right. There we go. All right, guys. All right, go. So listen, very quickly, how to face war and recession and still profit in the financial markets here. All right. Guys, I don't think I need to spend an inordinate amount of time introducing myself. I think that the introductory video was the purpose for that was to really just give anyone here new who has absolutely no idea who I am. But I will tell you guys that I have been, as of December, I will be it will complete my 38th year as a professional trader. March of next year will complete 44 years of
virtually trading the markets every day of my life, or every market day of my life, for 44 years, 38 of those years as a professional. All right. I am considered to be one of the most recognized traders in the world today. I was chosen as the spokesman for the entire trading industry all the way back in 1999. I've trained tens of thousands of traders worldwide. I am the best-selling author of 5 international best-selling books that are written in 5 different languages. I continue to be one of the largest funder of professional traders in the world today. And I also continue to be one of the most sought after speakers on the topic of trading markets for a living. I've been written up in virtually every single periodical, newspaper, have been on virtually every single financial program that you can think of. And I continue to travel the world almost on a yearly basis, spreading the gospel of financial freedom and spreading the gospel of trading for a living. All right, images of my books here. In 2020, I was celebrated by the NASDAQ for 33 years of professional trading service. I also served as a NASDAQ market maker in the beginning of my professional career, which dated back all the way back to the mid 1980s. All right, guys. Before we start, just here's where you can find me all over social media, whether it's X, Instagram, Facebook, and of course, most of you are watching me live here today on YouTube. YouTube channels, we spend a great deal of time making sure that every single day you have some piece of content that helps you raise your level of market sophistication and get a little bit closer toward that ultimate step or that ultimate state of trading mastery. My channels on YouTube are in 3 different languages: English, Spanish, and Portuguese. All right, guys. So what I want to do here today is I want to teach you how to turn panic into profits, okay? And then how to pick up the pieces after panic. Every professional market player needs to know how to handle themselves during panic times, during recessionary times, during market crash times. I've seen some of the most talented market players over my career get wiped out during the panic times, during the crisis times. And to me, the ultimate test of your acumen as a market participant is your ability to survive these times. If you can't survive the panic times, if you can't utilize them for profitability, then your time as a market player will be relatively short, because every trader will experience these panic times, these times of crises. Every trader must go through them. And I'm going to teach you how I have identified when a potential panic time is near and how I position myself to profit from these panic times. Now, this is going to require that we take somewhat of a more macro view of the world, a more macro global view of the financial markets. All right. So not short-term oriented stuff as much as a global macro view. All right. That's important as well. Okay. Now, in order to do that, I want to first give you I want to give you my history. All right. How I came into the financial markets, which will lead to our major topic today. But I first want to give you a little bit of history. In addition to that, in order to do that, we have to go all the way back through the history of our current monetary system. So let me show you that now. Let me do that now with you. My history, how I became captivated by trading markets. But first, I'm going to take you all the way back to the year 1933, people. All right? In the year 1933, an executive order was issued by the president at that time that actually revoked U.S. citizens from legally holding gold of any significant amount. All right? You'll find out why this is important. In 1993, some people refer to this as one of the greatest thefts in financial history, when the U.S. government stated that no citizen was to hold gold of any significant amount. They were ordered, all right, to be before May 1st, 1933. They had less than 1 month. Notice the time here. They had less than 1 month to hand in all of their gold. All right? And anyone who failed to do so would be put in jail. All right, up to 5 years, if I'm not mistaken, or up to 10 years. I can't remember how long it was. But this was the case. And this is called the Executive Order 6102. All right, 1993, America collects all gold from all of its citizens. Okay? Now, what happens next, a number of years later, the world enters into World War II. And during this time, all right, many countries in the Europe area, they sent their gold to the United States for safekeeping. Much of the war was happening in that part of the world. Gold was being taken and stolen. And so many countries sent their gold to the United States for safekeeping. I want you to understand this. First, the United States takes all of its gold from all of its citizens. Then the United States starts taking gold from other countries, not taking it, but accepting it, holding it for safekeeping, serving as the globe's or the world's #1 gold custodian for other countries. All right? These two kind of go hand in hand. One is taking the gold. The second is accepting the gold, another form of taking it from countries. So from citizens first, from countries second. Okay? Now, what happens next is what's called the Bretton Woods Agreement, where 44 countries, many of these countries had already sent the gold to the United States. Bretton Woods Agreement, 44 countries come together to create to agree upon and create an entirely new monetary system, placing the US dollar as the world's reserve currency, which made sense because if the United States was one of the largest economic powers, in addition to the fact that if the United States had most of the world's gold, that of course their currency, the dollar, being backed by that gold made sense. So $1 is backed by one US dollar is backed by the United States' gold that it had obviously on hand and in custody. All right? Now, throughout this period, guys, gold was fixed at $35 an ounce. So once the United States confiscated or took all of the gold from its citizens, it repriced gold at 35. So what's interesting to understand here is that the United States did not really confiscate the gold. It paid every citizen for the gold, but it paid them $20 to $24 an ounce. All right? $20 to $24 an ounce. I believe it's closer to $20 an ounce. All right. Once they got all the gold from the citizens, they repriced the gold and fixed it at $35 an ounce. And if you see on this chart, all right, this is going all the way back to the 40s, the 50s, the 60s. Gold is fixed at $35 an ounce. Okay? You'll see why this is important. We're coming up to it. Okay? Now, what happens is that the United States enters into a very long, very costly war called the Vietnam War. Costs are running out of control. All right? And this began to concern a lot of the countries that had their gold in the United States, because the United States is not supposed to be spending a dollar unless that dollar is backed by gold. All right? You follow what I'm saying? This is important. This is important for us to lay the groundwork for crises development. So listen to me. Under the Bretton Woods Agreement, $1, the world reserve currency, is supposed to be backed by $1 worth of gold. If America is starting to spend $1 zillion, a lot of people start to realize that, wait a minute, the way the United States is spending dollars, they're spending dollars, and we don't think that every dollar that they're spending is backed by $1 of gold. There's some funny business going on here, right? All right? Because if there's only $1 billion worth of gold, for simplicity's sake, then America can only spend $1 billion. All right? If it's spending 10 billion, then obviously they're spending more dollars than there is gold. All right? Let's begin to concern a lot of countries, all right, that had their gold on reserve at the United States. Okay? Now, the Vietnam War, costs are going out of control. America's spending and spending and spending like there is no tomorrow. Sound familiar? Okay. Now, on top of that, all right, this President Lyndon Johnson, he creates a major social program called the Great Society, and goes on a massive spending spree, giving out social benefits to the poor and downtrodden and so forth and so on. So you put these two things together, people, you put major spending in a war that seems to be a never-ending war in Vietnam. You add extra spending by creating a whole slew of social programs where you're just giving out billions of dollars for social programs. Sound familiar? Okay? This further concerns many of the countries that have their gold on reserve at the United States. France, the French, actually, France sends a warship to New York as a message to the United States: give us back our gold. Now, what this act does is it puts the world on alert that we don't have any confidence in what the United States is doing right now. The whole monetary system that was set up, we don't like it anymore. Give me my gold back. This was the message sent by the French, and that message began to spread to other countries. And this was a crisis developing, in order to prevent this mass exodus. In 1971, President Nixon makes a major announcement. This is called the Nixon Shock of 1971. He shocks the world by severing the dollar from gold. Now, it's crazy that a lot of people don't still believe that the dollar is backed by gold, but the dollar is not backed by anything as of April 15th, 1971, when Nixon severed the convertibility of the dollar into gold, which basically means that no country is now allowed to get their gold. And no dollar that any country has can be converted to gold. The link between the dollar and gold was severed. And the dollar from this day stood solely on the back of the complete faith and confidence of the United States, no longer physical gold. All right, this is called the 1971 Nixon Shock. Now, why am I going over this part of financial history? Because, guys, history repeats. It doesn't repeat exactly the same every time, but it repeats close enough for us to play the same cycle again. And so what I want you to understand is that what creates major crises, it tends to be the same thing in financial markets. It is a power that a good thing, a powerful thing gets decided on. Then the entity or the company or the market or the country, it doesn't matter, starts to get a little ahead of its skis and starts to overdo things and starts to overspend and get in debt. And this overspending and get in debt starts to break down the confidence in what was originally decided as good and strong. All right? So, U.S. good and strong, Bretton Woods Agreement, right? The world agrees, 44 countries. Yes, our gold is there. The U.S. dollar is king. The spending starts to get out of control. The debt starts to get out of control. Sound familiar? Then the confidence starts to break down. Sound familiar? The BRICS nations coming together to form a different type of currency, a move away from the US dollar, too much spending, too much debt. We no longer have confidence. Same thing happening. But back then, it created the crises of the 70s. So all of this development created a crisis of the 70s, the 1970s. And so let's go back. You're going to see how I'm going to tie all of this into today and show you how this is leading to the same thing and how we could turn this into one of the mega periods of our wealth building if we play it right and if I'm correct. All right? All right, let's get back. So all of this is developing, guys, right? 1971, Nixon says, oh, wait a minute. You cannot get your gold. The gold is now ours. All right? You have dollars. You can't take the dollars and convert it into gold anymore. Take your dollars and be satisfied, but don't come here expecting us to give you gold for the dollars anymore. All right, that's over as of 1971. Now remember, gold was fixed at $35 up until this point. But now that Nixon severs the convertibility of the dollar into gold, you can't keep it fixed anymore. So shortly after, gold gets unsevered, and look at what happens. Boom! Gold goes from $35 an ounce to over $800, people. Do you see that? It's $35 an ounce to over $800 in a relatively short period of time. Now, this was one of the worst periods in American history. This was crisis time. Do you understand? Gold is doing this during one of the not the, I would, some might say that the Depression was the Depression was the last crisis, but this was a brand new crisis, the first one after the Depression in the 1930s. So America's going through a crisis decade. Inflation is running through the roof. It's war-torn in the Middle East. Sound familiar? War-torn in the Middle East. All right, I hope you're following the symmetry here. All right, overspending, over ballooning debt, waning confidence in the dollar. All right, and other countries starting to make moves to move away from the monetary system based on the dollar. Same thing we're experiencing now. This was already done basically back in the late 60s, 70s, creating a decade of crises. This crisis created a massive run to the upside in the hardest money available at that time, called gold. Now, where does this come in with my history? Well, my father was a taxi driver. He had his own taxi. But my father had this, in the 1960s, my father had this very special client. Some of you know the story. This client was some Wall Street executive that my father took to work and back every single day. All right, it was a big part of his business, this client. And this client happened to be a gold specialist. Now remember, in the 1960s, no citizen was to really have gold of any significance, but there were some people that did. This person was a gold specialist, and he instructed my father that says, "You're about to have a son." That's me, all right? What I'd like you to do to make sure that your son is gonna be okay, I want you to buy an ounce of gold every single week of your life. It's $35. Now, my father had a lot of faith in this person. He became basically a family friend. This was a very wealthy person, so my father took heed to the advice. This man gave my father the contact to go to buy, because it wasn't quite legal at the time, 1 ounce of gold every single week of his life for $35. He did this throughout the decade in the 60s, all the way into the 70s, and I believe up until 1974. All right? So my father had amassed a fairly sizable amount of gold over close to a 10-year period. When the price was no longer fixed, when the artificial fixing of gold at 35 was lifted, this is what happened. The artificial, well, it happens here really. And gold takes off. And throughout most of the 70s, all right? Gold is rocking to the upside. Now, at the time, people, I did not understand. I'm going to see your faces here. At the time, people, I did not understand, right? I did not understand why where I lived changed, our house changed, our cars changed, my clothes changed, my state changed, my schools changed, my school changed, my friends changed, our entire life changed. I was a little too young at the time to understand the reason it changed, but everything in my life changed. We went from basically being regular middle class to basically being wealthy. And I never understood, but it was at the height of this gold run that I found out why. I found out, people, that my father took advantage of crises by having one play, gold. Gold changed our entire life. It took our family from being regular to being wealthy. And when I realized that it was because my father did one thing, one financial thing, one play, one item, when I found out that's how our life changed, I knew I want to do that. So I figured if my father did this with one thing, what if I can do it with multiple things? If my father had one play and one play changed an entire family's trajectory, if one thing could do this, I want to do it with many things. If one play could do this, what if I could do many plays? And my dream of becoming a professional like the client that my father took to Wall Street every single day, that dream turned alive in the beginning of the 1980s when I realized it was gold that saved my family. Now, let's go back to the charts here. All right, let's go back. It's crazy. Let's go back. So, if you look, here is the year. 1981 to be exact. All right. I start my journey as a market participant in March of 1981. All right. Now, let's keep going. This sets my family up for life for the most part and starts my passion for being a market player. All right. And by the way, guys, my first play in the market of my life, I will show you this if I can. Let me show you this. I want to show you this. Was a company called Eli Lilly. Some of you know this as well. All right. My first play was Eli Lilly in March of 1981. I will show you this. Eli Lilly, 1981. Hope you can see this. There we go. I even have it already arrowed there. Boom. There's 81 right there. Okay. And I actually still have this, but the majority has been sold into something else. But this was my first play, Eli Lilly. Now, that's crazy, right? Crazy history here, guys. Crazy history here. Give me a second. All right. So, America has this crisis decade. Gold gets its cap at 35 lifted. Gold responds to that crisis by moving from 35 to over 800, changing my family's life, changing my life, and spurring my lifelong passion for trading or playing financial markets. Okay? Now, let's talk about the boom to bust cycle and I want to show you how everything repeats, all right? This is where you want to start taking some notes, maybe. I want you to understand, people, that markets will only repeat this full cycle. It is going to repeat this over and over and over again. In fact, there is nothing else markets can do. And I don't care, people, whether you're talking about the equity markets, the bond markets, the options market, the cryptocurrency market, the forex market. It doesn't matter. Every single thing that human beings trade back and forth will form this cycle over and over again. It's almost like the markets are trapped on rails. Now, this cycle can be divided into 4 parts, really. There's the bottom part to the left, the bull phase or the bull market phase of the cycle to the upside. Then there's a top. Of course, that top leads to a bear part of the cycle, and then you repeat the bottom again, and you repeat this over and over and over and over again. Now, I like to look at this cycle based in stages. So on the far left-hand side, you have stage 1. Then you have stage 1 breaks out into stage 2, called the bull phase. Stage 2 turns to stage 3, which is the top. Stage 3 turns into stage 4, which is the bear phase. And the bear phase eventually comes all the way back to stage 1. Now, what makes this difficult to decipher, there's a few things that makes this one repetitive macro cycle in all markets. What makes it difficult to identify is that the cycle is not always even like this. You see? It's not always even like that. A lot of times it's tilted like that. You see? So here is your stage 1, but then your other stage 1 is there. Sometimes it's tilted the other way. So you see, your stage 1 is here, and the other stage 1 is lower. Sometimes it is even. Stage 1 and stage 1. This is the easy one to decipher. But oftentimes you get the slanted versions. All right? Now, the other reason, there's several other reasons it's not so easy for many people to identify, is not only are the stage 1s in different lengths, all right? The distance sometimes between your stage 1s are different. So you might have this, Or you might have this, and the space between your ones are different. This space, or the time, the distance between the ones is shorter. But in this one, the distance between the ones are far apart. So sometimes the cycle is smaller or shorter, and sometimes the cycle is longer. It's still the same cycle, just the length of time is different. So understand this. This is very critical to understand. The markets can only repeat this cycle, but it repeats it a little bit differently. Sometimes even, sometimes the ones are not even. Sometimes the ones are far apart. Okay? And sometimes they're close together. Okay? There's one other reason that at times this is not so easy to detect, is that your tops and bottoms are sometimes different. So the stage 3 and the stage 1 can sometimes be different. So let me show you how there are different versions of tops or stage 3s. So you can have the flat top, sideways, and then boom. Okay, that's your flat. That's one version. You can have your steeple top. Typically looks like that. All right, that's still a stage 3 top. Bull phase, stage 1, stage 4. But that's your sharp steeple top. Okay. Guys, if you know how to identify these, wow. Now, sometimes it's rounded. So you kind of get this rounded version of a top. Okay? So you've got the pointy top, this flat sideways top, the rounded top. Those are your 3 versions of a top. Then you have 3 versions of the bottom, which are the same. You can have your flat bottom, you can have your pointy bottom, and you can have your rounded bottom, where you have something like that. There's your 4 coming into your 1. So you've got these 3 versions of a bottom and 3 versions of a top that kind of make one cycle could potentially look different from another cycle, but it's really the same cycle being repeated over and over again. All right? So the key point that I want you to understand is that there's only one cycle, and being able to identify where you are in the cycle will be your key to amassing great amounts of money and wealth in the markets. Now, in this cycle, guys, the best area to identify is right there, your transition from 1 to 2, and right here, your transition from 3 to 4. If you can become skilled at knowing when your market, whatever it is, guys, it could be an individual stock, it could be an entire industry or sector. It can be a whole market. It can be anything from an individual item to a collection of items to the entire economy. It doesn't matter. This is applicable to everything. And if you can take whatever you're focused on and determine where you are in that item's cycle, the macro one, the macro one we're talking about, because this also exists in the micro one as well. But if you can determine where you are in the cycle, this will be your key to turning that cycle into massive amounts of money. And the spots that are the most important are these spots right here. The transition from 1 to 2, the transition from 3 to 4. Most important spots of all. Now that's what we're going to focus on today, guys. This is what we're going to focus on today. We're going to focus on capturing this in whatever item you want to play. And we're going to focus on capturing that. All right? That's what we're going to focus on today. So get ready. Let's go. All right? Now, what I am showing you right now is a current chart of Nvidia. Nvidia has moved to become the most valuable asset on planet Earth outside of gold. It has supplanted Apple as the most valuable asset on Earth outside of gold. Gold is the most valuable asset. Nvidia is the second most valuable, but it's the most valuable stock in the world today. All right, over $3 trillion, over $3.5 trillion. Okay, we're looking at the history of Nvidia all the way dating back to 2015. But what I want to show you is that Nvidia has gone through multiple cycles. So let's take a look at it. Here's 1. Here's 2. Here's your 3. And boom. There you go. 1, 2, 3, 4, and back to 1. So what makes this slightly more difficult to identify is that it's not your perfect cycle like that, where your ones are even. It's this version, you see, where your left one and the right one are on different planes. So your 2 is longer than your 4. Here, your 2 is even with your 4. Okay? But in truth, the 4s tend to be shorter than your 2s in most cases. And you can see that here in Nvidia. Your 2 is elongated and your 4 is sharp and short, right back into 1. Okay, so we have our 1 and boom, we go back into another 2, an elongated 2. All right, let's do our numbers. I want you to be able to do this on anything you look at, to map out that cycle and put the numbers on it. 1, 2, 3. Now that's the steeple top, right? You got. And 4. And here's your steeple bottom or your V bottom. 1. So here you sort of got more of a flattish bottom. Here you got a V bottom. Okay? And 1, 2. Now, what do you think? I want to see your faces here. All right. All right. Now, what are you seeing now? What are you seeing right now in this chart? All right. I want you to look at the last, I want you to look at the last one. I want you to look at the two. And then I want you to look at where we are now. And you tell me, what do you think is next? All right, take a look. You tell me, what do you think is next? Talk to me. Scooted, let me share this. Second here. All right, here's our one. Here's our ones. Here's our twos. Threes. I know you know. I know you know. I know. I know you know. Three. Yeah. So, if I'm right that sometime next year, it appears as though a crisis is brewing, and we want to profit from this. If I'm right, I think I am, but if I'm right, we need to find things that have gone close to three. We don't want ones, do you understand? We don't want things that have just started twos. We need a collection of threes. We need elongated twos in that cycle that we know the next thing is three. Now, what if we could collect a few of these threes? They're not threes yet, but we know three is next because the two is so long. Do you understand? If we can get long twos that are close to threes, when a crisis hits, when a bad time resurfaces, when a recession rears its ugly head, they are the first and the most powerful to fall. The bigger they are, the harder they fall. Do you understand this? Your longest green, your biggest profits are going to come from those elongated twos that are close to threes because they crack the hardest. Tell me you understand this. They crack the hardest. They crack the hardest and the fastest, and your money just rains like manna from heaven. You guys understand this? And you can collect them in advance with what I'm teaching you. And I'm not finished yet. What I'm teaching you, you're going to walk away from this session being able to collect them, know how to identify them, and know what is going to fall the hardest and the fastest out there. Okay, good. It's powerful. Watch this, it's powerful. We're not even finished yet. This is powerful. Now, all right, let's go. Let's go. Now, I want you to notice that there are two moving averages on this chart, right? There's the 20-period moving average, that's the blue line, and then there's the red line, the 200-period moving average. Now, if you followed my work for any period of time, you know that those are the two main moving averages I want you to use on everything, all right? So we always have the 20, and we always have the 200. Now, I want you to look at the shape of the 200. The shape of the 20-period moving average. Notice that the moving average is really showing you the cycle, is it not? Look at the 20-period moving average. Just trace the 20-period moving average. Let me even do it a little thicker so you can see it. We trace the 20-period moving average. You'll see that the 20-period moving average is showing you the cycle. But I want you to do it also with that 200 there. So if you trace the 200, look at what you get. So you see this state here, this is narrow. You see how this state is narrow. You see how you see how close the 20 got to the 200 here. It's narrow. Narrow state. Say narrow state. Narrow state. See? But it gets wide, right? It gets wide. So you kind of go from this narrow to wide back to narrow to wide. Okay? So if you can, you know that when your moving averages are close, and this is a weekly time frame, by the way, guys. Okay? When you're close, because weekly and monthly are your macro time frames. So when you're close, you're in that one. Do you understand? And what's after 1? 2. But when you're wide, that means you have been in an elongated 2. And what's next? 3. What's next? 3. What's next? 3. All right. Good, good. We're gonna tighten this up. So let's talk about how to use the 200-period moving average as a value guide. All right. So it's important to know guys, it's very important to know anything you're playing. It could be a stock, it could be a forex pair, it could be a cryptocurrency, it could be anything. Doesn't matter. This is applicable to any market, guys, any market. You have to know how to determine deep value. You will never make it if you have not learned how to identify when your item has entered deep value zone. Do you understand? And this is, if you can't get that, then you can't be a good market player ever. So this is very critical, what I'm going to show you and teach you. It's basic, but it's very powerful. All right? You have to be able to identify the value zone, because if you can't identify the value zone, you can't identify expensive zone. You first need to know what value zone is. All right? So let's go. We're going to use the 200-period moving average as our value zone. Now, when we put the 200-period moving average on our item, and we know how to read the different stages of the item's overall macro cycle, we know that the value zone is always around the 200-period moving average. So, and especially if your stock, let me do this with a different color here. If your stock gets under the 200, that's deep value zone. This is deep value zone. So if the deep value zone is actually at the 200 or under it, the deep value zone starts at the 200 and it gets more valuable below the 200. If that's the deep value zone, then what's this zone? The very expensive zone. So value is here. That's value, V for value, and expensive is here. All right? Makes sense. So the further you are away from the 200, the more expensive your item. It's basic, but it's powerful, people. Do not confuse its simplicity for lack of power. Okay? Don't confuse its lack of complexity for lack of value. This is basic, it's simple, but it's extraordinarily valuable. And you would be surprised how many professionals forget this, or don't apply this, or actually don't even know this. They're not great professionals if they don't know it, but still, there are many people out there playing the markets and still buying overly expensive things, not realizing that they're at or near stage 3. You should not be buying something with an elongated 2 near stage 3. You should not be buying up here. And you won't after this session. After you finish this session with me, you won't be committing this error. You will be looking to get things of deep value, but you will not be looking, you will no longer be pulled into markets there. Okay, not on my watch. I won't allow it. All right, guys. Now, let's take a look at gold. I told you that my father rode the gold wave from the 60s, and he caught that giant move in the 70s all the way to $800 from 35. Okay? Changed our life forever. Okay? Made me want to be a professional market player. I started in 1981, landed my first Wall Street position, and shortly became and quickly became a NASDAQ market maker in 1986. Okay? Now, I want you to look at the 200 period moving average of gold. I want you to look at how high it got away from the 200. Look at where it started. Then this collapse takes decades. But look at the deep value zone. See that value zone? It is here, people. When I took over I took over the family business of going back into gold. Gold was my Bitcoin back then. And I just went on an accumulation spree of gold. Starting from 1996 onward. It is here that I even began, that when the first spot gold ETF came into existence, I started piling into the spot gold ETF, GLD. But I just want to point out the value zone that I want you to be able to identify. Now, this is not a value zone. That's expensive zone. So if you look at these micro cycles, guys, look, here's your cycle. You see? That's all it is. It's a big one, though. Now, the older your item, the bigger and longer the cycles are going to be. The younger your item, the shorter your cycles are going to be. Do you understand this? Tell me you understand this. If your item is 6,000 years old, like gold is, your cycles are going to be super long. If your item is 15 years old, like Bitcoin, your cycle 1-to-1 is going to be short. Tell me you understand this. I'm not even going to move until I see you tell me you understand. I'm going to repeat it one more time. All right? Tell me you understand this, people. All right? Tell me. If your item is 6,000 years old, your cycles are going to be far apart. 1-to-1 is going to be far apart. If your item is 15 years old, that's a baby. In the grand, your cycles are going to be close. 1-to-1, 1-in-1 is going to be close. You're going to go through that cycle faster. You got it? So this is why Bitcoin comes back so much and so big, because its cycles are shorter and it's younger. It's more vibrant. It's a 15-year-old. 15-year-old is going to be more vibrant than a 6,000-year-old thing. All right? Senior citizen, teenager. All right. Good. Got it, guys. Good. Guys, it's going to be really, really special. We put all this together. You're going to see. You're going to see. All right, I'm leaving you with something really powerful here. All right, something you'll be able to use for the rest of your life. All right, powerful. All right. Yeah, let's go. Okay. So we've got that value zone right there. Beautiful. We got that expensive zone. All right. Good. Now, let's go to the next item. Let me show you another item here. You've got, look at the Dow Jones Industrial Average. All right, this is the oldest index in existence. Dow Jones Industrial Average, look at its value zone. This was during the 2008 financial collapse. The only real time it got to the value zone was during that time. Okay? It almost got there during the collapse in 2020, but it got to the deep value zone in the collapse of 2008. All right? Now, again, you just need to be able to identify the value zone. If you look at the S&P 500 index, same thing, deep value zone. Remember, your value starts at 200, at the 200. So sometimes it can just kiss the 200 or come near it. But when you get under it, that's deep value. Okay, now, let's keep going. Look at the NASDAQ. Look at the value. All right, this value came in 2002. 2002, 2003, and 2009. Now, look at where you came from, though. This is the dot-com collapse, which, if you knew this, you would profit from what is about to happen because you are so far away, which we'll talk about. But you come all the way back to the value. The value. Now imagine people, imagine you piling into things here and there. You would be, people would call you a genius, wouldn't they? They would call you a genius today. How did you know? The world was in panic. Panic profits. How did you know? The world was panicking. Everybody was selling. How did you know? You would be hailed as a genius. You see, people, this is why some people hail me that way. Because in 2001, 1, 2, 3. When the NASDAQ's near that, I put my entire life savings into Apple, Microsoft, Amazon. These were my biggest play. All of my kids' trust funds, all of our wealth, and gold. You saw that gold in the deep value zone. And the NASDAQ got into the deep value zone. So I had gold, Apple, Microsoft, Amazon, deep value things. And people were like, oh my God, how'd you know? Can you come speak to us? Can you talk to my traders? Can you teach us? It's just this basic thing. We got to the value zone, that's all. All right? It wasn't rocket science. I mean, you can pretend like it's rocket science if you want. Yeah, well, I've got this proprietary model and dot, 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 dot. No, dude, it's the 200 period moving average. All right, let's go back here, guys. So, I will tell you the star that I got from this zone was Nvidia. So my traders will tell you NVDA that we have been in Nvidia, which I just told you is the most valuable stock in the world today. We got into Nvidia right here because the NASDAQ was in the deep value zone and we searched for deep value things. It wasn't rocket science. Now everybody's excited about Nvidia now. We've been in since 2010. Do you understand? 2009, 2010. All right. Okay. So if we go to Nvidia, this is what I'm showing you. Look, that's us getting in to Nvidia in the deep value zone. Now it looks like it's not doing anything, right? But these are huge moves, guys. This is huge moves. Hundreds and hundreds and hundreds of percent. But look at every single time. Let me do this with a thicker line so you can see this, guys. But look at every time. And let's go. Now when it really starts cooking, look at the value. So when do you spruce up? You know. Deep value here. Okay. But when do you want to actually be a little cautious? You know. Right? So you are far away from value, guys. Right. Putting it together. Now let's take a look at Bitcoin. Most of you who follow my work, you know I am a Bitcoin fanatic. I do not believe in selling Bitcoin. I believe that Bitcoin is the win and you just accumulate. So all my profits, I take profits in Nvidia, it goes to Bitcoin. It doesn't go to dollars, it goes to Bitcoin. If I take some off the table with my Eli Lilly position, it goes to Bitcoin. I don't put it in dollars, I put it in Bitcoin. Bitcoin is my currency. All right? But even with Bitcoin, you can tell when it's time to really pile in for huge value. There's your value zones. This is your value zone. Now, wouldn't you be called a freaking genius if you had picked off Bitcoin at these spots? You would be called a genius. So, my first entry into Bitcoin, many of you know this, was right here. And people say, Oliver, how did you know? How did you nail it like that? How did you pick it off like that? Now you know. When did I start coming here on YouTube and other channels shouting as loudly as I can? When Bitcoin was in the value zone. Oliver, how did you know? That's what I get today. It wasn't rocket science. All right? But you can also see that when you get quite separated, and when your two is long, guys, so it's not just separation. This is an important point here. This is a very important point I want you to know. All right? This is something you want to take notes on. It's that important. This is a note-taking thing here. All right? It's not enough for your item to get far away from the value zone. That's not enough. The length of time to get far away must be long. So what I mean is the stage 2 leg can't be short and stubby. Like it can't just be straight up. That 2 has to be long. So you need long 2 and far away. Far away and short 2, which is possible, meaning short in duration, short time. All right? You just want your 2 to be a mature stage. You don't want it to be, well, 2 just started and look at it, it's far away from the value zone, but it just started. That doesn't count. The 2 has to be mature. And the reason for this, people, is that I want you to think of the leg 2, the bull part of the leg. Am I going the right way for you? Whichever way is the up way for you, right? That stage 2 is like a train. And you want the train to have many stops along the way to allow more people to get on the train. So we want a train that is so packed, there's no seats available, people can't move in the train, that it's full. Nobody else can barely get on the train. There's so many people on the train. But that train has to have many stops to allow people to get on and on and on. If it had one stop and most of the train is still empty, then how can it fall? Because the fall is by everyone leaving the train. But if it's only 5 people on the train and it holds 10,000, then 5 people getting off the train is not going to cause a wreck, right? But if every seat on the train is taken, every standing place, that this train has been in motion to allow people to jump on board over a long time, you know that train is full of people. And when panic strikes, when someone yells fire in the theater, everybody starts scrambling for the exit. And that's what causes the collapse. And that's what we want when we want to turn panic into profits. So you need the 2. You need that train having moved to the upside over a long period of time. So it must be a long 2. Okay? Okay. It's very important. I had to beat that horse a little bit there. Very important. All right, let's go back. So I want you to look at this long 2. You see, this is a long 2. Now you can collapse because the 2 is so long. Here, this is a long 2 too. Long 2. But this is not. So you got way more to go here. You see, this, you can't have this in a 2. So really, that's the start right there of a brand new one, in a way. So all I'm saying is that don't just do distance, because you can start here and go straight up and think that this is a 3, but no, because you just started, this 2 is not long enough in duration. You see? Not long enough in duration. Not, this is short duration. All right, good. That's very important. Now let's talk about wide state zone, the wide state zone, guys, the wide state zone. So we know that, when your stock, when your 20-period moving average is close to its 200, you're in a narrow state. That's the value zone. But if your 20-period moving average disconnects and gets wide apart from its mother or its older sibling or what have you, however you want to look at it, the 20 separates from the 200, you're getting expensive. All right? So here's value, you're getting expensive, the expensive zone. Now, I want you, just like there was a value zone here where your stock falls to the 200 or below, or your item, that's your value zone. Your expensive zone is when your 20 separates from the 200 and your stock is also also elevated above the 20-period moving average. So this is expensive zone. This is value zone. Okay? But the key thing is your 20-period moving average wide apart from the 200? That's the key. So let's look at this. Look at the single wide state. This is a single wide state. Look at the left, where you've got 3 items here, right? You've got the stock, you've got the 20, and you've got the 200. Now, these 3 items are close together here, and now the 20 separates from the 200, but the stock is still close to the 20. So these 2 are still close. That's fine. But your 20 is no longer close to the 200. In fact, it's far apart. This is what I call single wide state. You've got single wide state. These 2 are close, but these 2 are far away from the 200. That's a single wide state. Now, this is potentially due for a collapse into stage 4. Okay? Now, there is, you see in this Nvidia chart again, you see how your 20 gets far. But so you've got that single wide state. So you got single, both your stock and the 20 are close, but they both are far away from the 200. Here you have more of 3. You have more of a dual space. Your stock is not that close to the 20, and your 20 is not that close to the 200. That is what I call dual wide space. Here is single wide, and here is double wide. Wide zone 1 and wide zone 2. You got double wide here, single wide, double wide. They both work. Single wide, double wide will tend to collapse harder. So you got single wide collapsed, but double wide collapsed more. They both work, but just know that double wide will tend to be a more violent and more thorough collapse. This is turning panic into profits, people. Love it. I love it. In fact, I will tell you, I much prefer making money on the downside. All right? I just much prefer that. I love declines. I love collapses. I've made my longest green in collapses. My first score, I started on Wall Street in 1986. The next year, less than a year later, we had one of the biggest market collapses in financial history. The crash of 1987 was my first major score on Wall Street. First major one. Put me in the sights of a lot of people on Wall Street because I did so well during the crash. It's my first taste of major money, the crash of 1987. And then there were several others. There were the tigers that collapsed in the 1990s, and then the Russian ruble crises, which undid, long-term capital in the 90s. Then there was the crash of the dot-com bubble crash. And then there was the 2008 collapse. And then there was the 2020 meltdown in the market. I profited from all of that. Huge. They were my biggest scores in life. But here's the thing, guys. It wasn't that I profited on the way down and that was it. We're talking major profits, guys. But I also knew how to pick up the pieces in the deep value zone. So in the collapse of 2020, you guys have the video on my YouTube channel where I'm giving a speech at one of the major conferences telling them we're at 3, a top in the market is here. That was in February of 2020. What happened in March of 2020? The world collapsed. And it was one of the biggest scores of my life. Catching that drop was quick, but that March 2020 drop. But what did I do with the profits? We got so quick from 3 to the value zone, I put it in Bitcoin. I put it in Bitcoin in the value zone because I felt that was going to come out of the value zone faster than anything else. So I want you to be able to profit from the panic from 3. But I also want you to be able to pick up the pieces in 1, in the value zone. If you put those two together, whoo, My goodness. It's a wonderful, wonderful life. It's a wonderful life, people. It's wonderful. All right, let's go back to the charts. I still, guys, I'm in this 44 years, and I still get excited like a little kid. I freaking love it, man. I love it. All right, let's go back. Okay, this stuff gets me excited. Okay, now, the double state, remember I told you this, we did this single. The double wide is when you're not only is your 20 separate from your 200, but your stock or your item is separate from the 20. So you have double wide space. You got space 1 and space 2. It's double wide. And I told you double wide falls harder than single wide. They both fall. But I want you to have in advance, guys. You can have this in advance. You can know right now what's had a long 2, and out of those long 2s, which ones are double space long 2s, double wide long 2s, or single wide long 2s. And when the panic starts, boom, you've got the trains that are so packed with people, and these people are going to start running for the exit signs, and these things are just going to melt, and it is going to be like freaking manna falling from heaven for you. Everybody else is going to be getting killed. Everybody else is going to be running for the exit signs. Everyone else is getting destroyed, and you're just freaking raining profitability on you. And the crazy thing is, it's not rocket science. It's 12-year-old stuff. If you really think about it, guys, nothing here is complex that I'm telling you. We're looking at little lines. This line is separate from this line, Oliver. It's baby stuff, right? It's almost, I feel like I need to talk. It's so basic. I feel like I should talk to you like a baby. Okay, boys and girls, this line is above this line and it's far apart. Is it close or is it far? Is this above the line or below the line? That's all it takes. It's wild, you know? And that's what I love about it as well, that it's not complex. It's not overly difficult. Anybody can do this. You just need to be taught. It can't be done unless you're taught. You know, we're not born with this. We're not born with this knowledge. We're not taught this in school. It's not part of our educational system. You need to be taught it. That is what I do. All right. Okay. All right, let's get back. So we've got the double wide. So guys, you can see where gold, my dad's profiting from here, profiting on the gold position from here. It gets triple wide and then goes into a multi-decade collapse, really, from that that double wide state. Understand? Okay. And the NASDAQ, guys, 2000, this is the year 2000. Look how freaking wide you are. Double wide. And the collapse brings you all the way back to the value zone, and I come in and pick up the pieces with Microsoft, Apple, Amazon, and gold. And gold. Right? Here's the Bitcoin in 2000 in basically 2017, late 2017. Here's your double wide here. Now, I'll tell you a funny story about this, guys. Funny story about this is that we're coming toward the end here. Funny story is, guys, I'm almost embarrassed to say it, but I had a growing bunch of traders in my organization. Oliver, we got to look at Bitcoin. And I said, stop talking to me about this nonsense. Didn't believe it. Didn't believe in it. I thought it was a distraction. It got to a place where I told, if you bring up Bitcoin again for me, because I looked at it and I says, how you're telling me to buy this thing? Haven't I taught you anything about states? And it angered me. It angered me that my traders were getting so enamored by this thing I didn't understand at the time. But what bothered me was that they wanted me to buy it here. And so I fired them. I kicked them out of my organization. Now I feel a little bad about that today, but I don't feel bad about being angry with them trying to get me to buy Bitcoin here. Let me show it to you again. Don't come to me and tell me to buy something that is double wide with a long two. You're going to get fired. Do you understand? Do not come to me, Oliver, this is a buy. After a long two and double wide? Come on. Now you know better. So this is what angered me. And so I got rid of them, told them to leave. You know, it's silly to me, but I thank them in a way because it is from here that I began to monitor Bitcoin, watch it. I knew it was going to collapse because I saw the double wide. So I'm saying, if this thing collapses and comes into the value zone and starts to firm, that's when I'm going to do it. And that's when I did in March of 2020. Remember, in March of 2020, let's go back to it. Wait a minute. Shoot. Yeah. So this was the fall. And so in March of 2020, that was the value zone. That was my first entry into Bitcoin. And people thought I was a freaking genius. It's crazy. All right. Anyway, let's get back. We're almost done here, guys. We're almost done. Double wide. Now, guys, not yesterday. A couple days ago, all right? First of all, let me just say this. My traders and I have been long MicroStrategy since November of 2022. We're up thousands of percent. Do you understand this in this stock? Thousands. Why? MicroStrategy was in the frickin' value zone. It's not rocket science. So MicroStrategy was in the value zone in November 20, in the deep value zone, November 22. Now, remember, on the value zones, we don't use the daily chart. We use the weekly chart or the monthly chart, right? Now, this is the daily chart, all right? And you can also do it on the daily chart, but it becomes shorter term. So MicroStrategy on the bigger time frame was in the value zone in November of 2022. In the daily, the value zone is here. You see? You can do this in any time frame. But from this value zone, you go to this state that morning. So what do you think my traders and I did with MicroStrategy on this morning? We flipped our long, sold the long, and went short on this day. And it was a huge collapse that's probably not finished yet. Yeah, I know we've got this little up thing here, but it probably is not finished yet. But again, people thought we were miraculous. Everybody wanted MicroStrategy, and everybody thought we were wrong to short it, to sell it and short it there. But we knew, and now you know, double wide. Come on, bro. That's not a time to be buying. It's not a time to be buying MicroStrategy as much as you might love it, as great as Michael Saylor is. That's not the time. You don't buy double wide things or you're gonna get fired. All right? You're fired. All right, but now you know. So guys, I want you to be able to take this and use it. This is something that can, these concepts that I've taught you here today, this is something that can pay dividends in a huge way for the rest of your life. Like, this will never go away. Panic profits will always be with us. Crises, collapses will always come and go. But if you happen to be one of the few who look like geniuses because you can turn those periods, you know precisely where to go, what to hit, to panic, to profit from those panics, and you also know exactly what to isolate, to pick up the pieces in the value zone, nothing will ever frighten you. No market environment will ever be feared by you. It'll place you in a very, very elite class. Because as powerful as this is, it's still a very small percentage of the world actually applies it or even knows it. And now you're part of that elite group. All right? Powerful, right? Talk to me. Isn't it powerful? Tell me if it's powerful. I want to see it. Powerful, right? Simple, but powerful. Crazy. I like things that are simple too. I don't like things that are complex and have power. I like the things that are simple and powerful. Most things in nature, most things in life that are the most powerful are simple. All right? Boom. All right, good. I'm seeing your comments. Thank you, guys. Thank you. All right, so now, so what I want to do here, if I can, guys, give me a second here. what I want to do is I want to offer you something really special. I know this is not for everyone, but there's certainly a group of you, a percentage of you listening to me today who really want to do this the right way. You want to take advantage of all of those panic profits opportunity. You might want to start a possible career in playing the markets professionally, which I'm an expert at doing. I have trained more traders in this world than probably anyone. But whatever you want to do, some of you may want to become part of the family. Part of the family in a way, some of you might need funding for your trading. And part of the family where I fund your trading. We go into business together. Or you might want to be part of the family where we take advantage of these panic profit opportunities and these longer term wealth oriented plays, picking up the pieces in deep value, making sure you never miss one opportunity. We don't miss panic profit opportunities, and we certainly don't miss deep value opposition. Ask any of my traders. We catch them, almost catch them all. And my traders are just outperforming everyone with these basic, powerful things. So it's Black Friday time. There are thousands of people every single year that wait for this time because there is no other time where what I offer is at as deep a discount. So this is your opportunity, guys. And I'd love to have you come on board as one of our family members. So here's what I want to offer you. I'm going to take prices down to as deep as 70% off. 70% off of any other time throughout the year. All right? So the site, if you want to review things yourself, is blackfridayolivervelez.com. Go there right now if you like. blackfridayolivervelez.com. Now, here are the retail prices throughout the rest of the year. You understand? So our complete trader program is $2,500. That's a regular price now. Then there's the complete trader package, which is probably one of the most popular selections, where you get fully funded as a trader, you get trained and educated for life. There's no expiration to this, guys. You're with me for life. You get funded up to $11 million. We go into business together, and I put you under my tutelage in the live trading camp for 11 weeks and so forth and so on. That's the most popular package, the complete trader package. But the regular retail price is $4,000 for that. Then there's swing prop. And this is quickly becoming one of the fastest and most adopted programs, because in the swing trading prop program, we can day trade and swing trade at the same time. We can hold positions overnight, and we can day trade intraday as well. And that program, regular price is $2,000. Then there's the wealth program, where we take longer term plays. We make big plays like the MicroStrategy play, where we have thousands of % to the upside, and the Bitcoin Club. All right? That's $8,000 value, and so forth and so on, guys. So these are your regular prices. But for Black Friday, look at the drop. Guys, it's a gift. It is a gift. It's a gift. It's a gift. You can give yourself the gift of trading, the gift of wealth, for a dinner Guys, the complete trading program, look, this is education for life, training for life, with us every single day, live trading, completely funded. You put your money away, you trade with capital from the firm capital, no risk to you at all, only the potential to profit. And your training never stops, your education never stops for the cost of a family dinner with a bottle of wine. That's crazy, $9.97. The complete trader package from $4,000 to $1,500. The swing prop, the fastest growing program that we have, where we swing trade and day trade at the same time. It's amazing to day trade some of the very same things you're also swing trading in, holding for a week or 4 days or 3 days for bigger gains while you're also day trading it, micro trading it at the same time. It's powerful. Of course, there's the Bitcoin Club and the Trade for Wealth program. We combine them together for $3,300. One-time fee for life, guys. These are lifetime programs. They never come to an end. You are family forever. Your funding is for life. Your education and training is for life. I am still learning, and I'm still passing on those learnings onto all of my traders. And you can ask anyone here who's listening, who happens to be one of my traders. Ask them, they're here. This wasn't the best decision, one of the best decisions of their lives. This is your opportunity. Give yourself the gift of trading, guys. Give yourself the gift of wealth. Let's scour the earth together for the best opportunities out there for wealth. Let's play Bitcoin and many other things the right way. If you want to do trading the correct way, under the proper tutelage, under the proper guidance, with the proper training and the correct amount of capital. Most people are failing at this trading game, not only because they lack the knowledge and information to do it properly, but they're trading on a shoestring budget, and you can't do that. So let's do it the right way. If trading is what you want to do, let's do it the right way. I will pour every single thing I know into you and give you the appropriate amount of money to increase the odds as high as they possibly can be that you make it to the promised land. All right? And if you really want to go all the way, guys, the way to go is the Master Trader Program, which basically combines almost all of these things. And there you have it, guys. Now, I've got one more very, very special thing here. I've got a 60-minute, what time is it now? It is exactly 12 o'clock, more or less, Eastern time. So you've got 1 full hour. Any of these programs that you take, anytime anyone commits in the next hour on any program, I'm going to take you for a day. Now, guys, I charge $1,000 for this, but I'm going to take you for this day. We're going to spend a morning trading live together, and then we're going to spend several hours of me training you based on what we did during our live trading session. This is called my Mentor Me program. It's a one-day, very, very powerful event. And I've used this event to train institutional traders, hedge fund traders, and so forth and so on. But I'm giving you this absolutely free. My Mentor Me live trading day training session. All right, you're getting that free, and thousands of people all over the world have paid $1,000 for that. So sign up for any program in the next 60 minutes, and that's yours absolutely free. Now, What I will also do is if you're looking to go down the path of true professional trading, you want to give this the opportunity to one day at one point take care of your life trading. That was my dream. If you take the complete trader package, which involves full funding, lifetime training, sessions, private sessions, semi-private sessions with me for the rest of your life, funding for the rest of your life, trading for the rest of your life, training for the rest of your life. You take that package, I'm going to give you a 60% payout, which means that you make 60% of the gains. I'll take 40% of the gains. But it's not your money. You will not be risking your capital. There is no way to lose. Do you understand? You can only win. I will give you 60% of those winnings. All right? And I'm going to give you lifetime access to my academy, which people pay $3,000 for. And in this academy, guys, there's thousands upon thousands upon thousands of hours of me training you, teaching you things, everything from how to use moving averages appropriately, how to enter appropriately, how to exit appropriately, how to add appropriately, and things of that nature. That is all baked into that academy. I'm giving you lifetime access to that. I'm also giving you that Mentor Me session, which a lot of professional traders have taken. I am also going to take you for a week under my personal tutelage to make sure you get the very best start you possibly can. We're going to trade together. We're going to be together. We're going to learn together. I'm going to train you personally. Okay? In the next 60 minutes, you're going to get this whole thing. Total value is $9,500 for $1,500. Guys, it's a Christmas dinner with a bottle of wine. One time for life. Do you understand how quickly even one transaction, one trade can wipe your cost completely out of the way? And we're talking about something for life. You can make this in one trade. It's crazy. It's a gift, people. So if you've ever had a desire to do this the right way, to do it professionally, this is your opportunity. If you want to swing trade as well, and of course, your entry way is the swing prop program. Some people just simply can't be with the markets minute by minute in the morning or what have you. And so swing trading becomes the best option for them, and that would be our swing prop program. But guys, you've got 60 minutes to take full advantage of this, all right? Now, this will still be the price if you cannot do this within the next 60 minutes. You will still get the same price, but you will get all the way through December 2nd, right? So you've got some days here. I'm going to still give you the 60% payout. And I'm still going to give you the access to the academy. Those who can take advantage of this in the next 60 minutes, you're going to get the Mentor Me and the 1-week mentorship. But if you can't make it in the next 60 minutes, you still get the same price. It's still $1,500, still the 60% payout. You will be the majority partner in the trading business. And you will have full access, lifetime access to the academy. Guys, I know that there are many things you can be doing with your time today. You can be out in the mall, you can be, I don't know, walking your dog around the block, watching Netflix, I don't know, whatever it is that you do, but you're here with me. And that is something that I do not take for granted. I made a promise a long time ago that every time I'm allowed to speak into a mic, or every time I'm doing a session or on a podium or doing a speech or a talk, I would do my very best to leave something behind, to value something that I believe that you'll be able to use for the rest of your life. I hope I did that here today. I believe I did that here today. And I want to thank you for giving me your confidence and your time. All right? And I'm also hoping that a number of you will be joining the family. I look forward to working with you every single day. I look forward to you being a brand new family member. All right, guys? And ciao for now. I love you to death. Boom! Boom! And another one. My last one of the year, but another one, guys. Thank you all. Ciao.